Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I came out with a buy recommendation on healthcare on, uh, was it Thursday? I believe it was Thursday. And I'm coming out with a buy recommendation again, this time on Brazil, the ETF. So let's get into it. This is a long-term chart of Brazil. EWZ is the ticker. This is the iShares ETF. So going back to 2009, we had this huge consolidation after being on fire. Brazil's stock market, it traded sideways over the next 15 years. Seen a lot of patterns like this. Saw one in EEM, the overall emerging markets ETF, which has gone substantially higher since then. Um, you know, Most market technicians are going to buy breakouts like this. Uh, Sometimes you'll see me buy on the low end, so I feel like I'm not chasing quite as much. A good example would be solar, China, where I bought those on the low of the pattern when they were really out of favor. Brazil is starting to get some attention. Uh, this is a country that produces all kinds of natural resources. And as you know, I'm bullish on energy. I'm bullish on, metals. I'm bullish on minerals like uh, MP resources. I've been long the rare earth ETF REMX. I've been bullish on. So this is kind of in that theme, but this is such a big pattern. I just don't want to let this go. And because I'm a little more hesitant on our market, I look for other things that aren't as popular. So this is more popular than maybe, I would say this still isn't very popular. I mean, I don't have sentiment numbers. I wish I did. But if you look at like, there's a lot more people following China than Brazil. So anyway, this you could look at this two ways. You could look at it as a huge symmetrical triangle. So here was the first touch A, and then you have A, B, C. They should be three waves. Here's B, A, B, C. This is C. And I don't see three waves here, so that's a little bit off. And then you have three waves up to here. That would be D. And then you have a pullback here, which would be E. Did I get that right? A, B, C, D, E, pullback, breakout. So, this kind of goofs it up a little bit, but the basic underlying message here is that it's been consolidating after these huge gains back in the early 2000s. And but there's another way to look at it too. You can look at it as an inverse head and shoulders pattern. Um, and so the way you would look at that, you can see my labels here. Here's your neckline, and here's your left shoulder, and here's your head, and here's your right shoulder. Has a double right shoulder, small one here, and here's your neckline. So that breakout gives you about the same price target as the triangle does. So let's call it 70 to 74, somewhere around that. But it's a huge potential upside, a double possibly. Um, and so I definitely wanted to talk about this. Now we're going to take a look at from 2020, this part on over. So here we go. Come on, here we go. And we have a smaller, we have actually, well, I would call it a symmetrical triangle. You could call it an ascending triangle, but this is slightly down sloping. So let's call it a symmetrical triangle. So 1, 2, 3, 4, 5 years in the making. So if you don't believe 15-year charts, maybe you look at the 5-year chart. And here's a really nice symmetrical triangle. And we got the breakout, and we got a spike up last week. This is a weekly chart, so each one of these bars that you can hardly see because the pattern is so big, represents a week of price action. Well, last week, not this past week, the week before, we started off just above the breakout level, and then we had a spike upwards, and then we had it close towards the end, towards the low of the weekly price action. That's bearish. It's what they call an evening star pattern and Japanese candlestick lingo. But then this week we had a bullish hammer. Sure enough, it tried to sell off at the beginning of the week, opened pretty much where it closed, tried to sell off, and then by the end of the week, it was right back at the high of the week. So that is a good sign that there were buyers. Somebody's watching these technicals and they're saying, I'm going to buy it when it gets down to 32.50 or whatever. So um, again, I'm not going to go with a stop, but I got a buy rating on this. I'm going to be watching the bottom of last week's price action very closely. Again, there's a lot of risk in all of these markets because of the US market and the amount of leverage there. If that thing goes to hell, which I'm not sure it will, but if it, I'm neutral, short term on the market right now. When people have to start selling things to cover margin calls because they're leveraged, it affects everything. It affects gold, it affects everything. So, anyway, this is what it is. I'll be watching the low. It's approximately 32, but I'm going to go without a stop right now. Let's just look at the intraday, what happened here the past couple days. Actually, it's about the last 3 weeks, and you can see it's holding its Akamoto cloud support here. We also have a small. This is a 2-hour chart, so each bar represents 2 hours. And you can see on this high that we got in early December, we don't have any bearish convergence. In other words, as it kept hitting higher highs, we were getting higher highs on the intraday chart. So that's confirming that high. And then we got a big sell-off. It was down like 6 or 7% in one day. And prices came back up to a bearish rainbow convergence, all these moving averages converging above price. And if it wasn't able to break through, it would have hit a new low. So that's why I didn't recommend it here. It was able to break through and then it just retested that on Friday. So, short term, you want to see it hold this 33 level. And longer term, we want to see it hold this 32 level. So that's why I'm doing this weekend. One last thing, if we look at the point and figure chart, this is confirming. We did have a bearish trend line. You're going to get a lot of changes from bearish trend lines to bullish trend lines and consolidations. But on this last breakout, we broke above the bearish trend line and we started a new bullish trend line. And here you can see we have a row of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So that's what they call a pull, and you don't want to buy a pull because that's telling you that it's overbought. But then on the last couple of days, we pulled back 2 or 3 at one point. I think we were at 32. So we had pulled back 3 boxes. I wish I would have pulled back 5 boxes, but this is what we got. I don't want to miss it. Again, I don't chase. So what I would recommend, oh, one more thing on the point and figure chart. Based on this breakout, our price projection is 56. And, as I talk about point and figure charts, the reason why I like them is they're the least subjective charts. They're not drawing the trend lines that I'm drawing and all of that where some biases can creep in. This is truly just supply and demand. And so this is suggesting a $56 price projection. The mass what would that give you? 60, 70% upside based on this. So again, I'm not holding my breath and saying I'm going to get 70% on this, but the trend is up, breakout of a big pattern. It looks like the upside could be really big. And so that's why I'm suggesting that. Oh, so I used ChatGPT and I just said, what's Brazil's natural resources like? and they gave me more information than I need. So if you want more detail, I would suggest doing that. But it's one of the most resource-rich countries in the world. It spans from minerals. Mm, the U.S. really wants these minerals that China has kind of a corner of the market on. Um, Also, energy, agricultural, forests like timber, and a huge amount of freshwater water. Um, they also have, agriculture. Well, I think that's enough, but it's like Canada, Brazil, um, you know, Russia, those kind of countries are natural resource countries. And again, over the last 2 years, I've been really big on metals and minerals, and now I'm expecting a handoff to energy. Oil, natural gas has already been on a tear. It just corrected about 20% after being up 70% in a few couple of months or a month, maybe. So that may be something we may go back and look at Antero Resources. But anyway, I think this has a lot of potential. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Oh, what I was going to say is um, what I would do is if it's up somewhat, maybe buy a small amount of your position, a 30-year position, or, a half of your position, depending on your time horizon and your risk tolerance and all those good things. That's normally what I do. And then going forward, I don't buy on green. I don't buy when it's up. I only buy when it's down. And so if I bought, a third of a position and it was up the next day 1%, I'd sell, uh, let's say I would sell a small amount of that. And then when it's down, I'd buy a lot more than I sold and also build my position that way. I hope it makes sense. Thank you for watching. Have a great rest of your weekend. Adios.